This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by my good friend Carlos Gonzalez Campo, analyst at Blockworks Research, kind of our Solana expert in residence here. Carlos, thanks for coming on the pod.
Thanks for having me, Jack. It's always fun to be here.
It is always fun. It's been a little bit since we've had you, but you do these monthly reports on Solana that are on the Blockworks Research platform that folks reading this should check out. They're generally just a really good way to stay on top of everything that's happening. You're probably working on July's right now, I would say.
Yeah.
Can you give us any alpha on that report? What's top of mind as you try to summarize the past month in Solana?
I guess the most interesting things are the network health section, where you have like Jito's BAM, which is like one of the most significant upgrades in Solana's history. And then you also have like the block limit increase to 60 million compute units. And then you also have like a signaling to get to 100 million CUs like in the next few months. So that's kind of interesting from the network upgrade standpoint.
Those are both subjects I'm planning on touching on today. But before we do any of that, I want to be a little crass here and just talk price for a little bit. We don't tend to talk about price a whole ton on Lightspeed, but as we record, Solana is, if you're looking to buy one Solana, you can get it for around 186, 187 bucks right now, which is the highest Solana's traded since, right after the inauguration of Trump and the meme coin that sent Solana to its all-time high. I find that pretty interesting. What do you make of? But one other piece to put out here is Sol ETH. The ratio of one Solana to one Ethereum is below 0.05, which is its lowest point basically in the past year. So Ethereum has had a lot of momentum recently and basically wiped out a year of Sol growth against ETH, just basically in the past 3 months, which is a trade that I think you would have missed if you spent too much time on crypto Twitter. But it looks like a lot of the problems that we have outlined with ETH's value capture have been priced in. And maybe Tom Lee going on MSNBC constantly has helped the asset as well in this weird Treasury company world we live in. But with those pieces on the table, Carlos, what are you making of Solana at 186, 187?
Yeah, I mean, it's an interesting point because like it has been up significantly like in the past month, but at the same time, as you mentioned, like it doesn't feel euphoric just because it has actually been underperforming like ETH. And I think a lot of people, like including me, missed that like revival of the ETH narrative. I think it does have to do a lot with like the treasury companies and like this stablecoin narrative of Tom Lee, like just going on CNBC and shilling it to like TradFi. But yeah, I think like I kind of like was surprised, to be honest, also by Solana's move to 190. And the reason for that is we had the point that like the pump ICO like a few weeks back. And I think like consensus on crypto Twitter at least was that Pump was going to get all the liquidity and it was going to be bad like for Sol and other assets within the ecosystem. And you kind of saw the opposite of that, where Sol has been like almost up only since the Pump ICO. And I think it's like in retrospect, it kind of makes sense. Like you kind of saw this like pivotal moment in Sol's history where like it outperformed like centralized exchanges during that moment, and it kind of like signal like how good it has become like from a fundamental perspective. So I don't know. I wouldn't be confident giving out like predictions on price, but I do think like Sol going up is good for the ecosystem at large and for like other DeFi protocols like I don't know, like money markets like Camino or like dexes and so on and so forth.
Yeah, you in your piece on Jito's marketplace, you had this section on the price of different Solana tokens, and I think one interesting piece to note, just you mentioned Pump, and it got me thinking, was Pump is actually still kind of underpriced relative to other Solana apps. If you look at price to sales or market cap to revenue, I forget exactly how you were measuring it, but
yeah, I was doing a price to sales, and Pump was like kind of trading at like 3x, which is extremely low. But like the caveat here is that like that is a backward looking valuation, in the sense that I'm looking at the revenue in the past 90 days in the piece. Whereas I think like people are selling Pump, or were selling Pump in recent days, because you have declining revenue, like, and declining market share to Bonk. So on a forward looking basis, like you cannot just like assume like the revenue they made in the past is going to translate into 1 year like forward looking. So I think like that's kind of what like you're seeing, like declining market share overall, and like people just discounting meme coin activity on the chain. And then the other thing is like they raise like $1 billion, right? And they have like this equity like token kind of dual structure. So I think a lot of people are just asking like, does the token actually accrue any value, or is the equity just taking all of the future cash flows generated by the protocol?
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Mm-hmm. Yeah, that makes sense. And what I'll say as to the Sol ETH question is, we had a guy from Standard Chartered, Jeff Kendrick, on the show a couple months ago, and he gave his kind of Solana versus ETH as like an outsider banker perspective. And he basically said a version of this argument where he was saying that I think on like a 5-10 year time horizon, Sol ETH maybe performs similarly, if not Solana outperforming Ethereum. But on a closer time horizon, he was actually more bullish on ETH, basically making the case that, yes, you can say that the growth of L2s means that Ethereum is giving up a lot, but not actually accruing a lot of value to ETH, the asset, based on the trading activity that's going on the L2s that's been kind of shuttled off of the L1. That's true, but it's kind of been priced in at this point. Like, that's not a new argument. Mm-hmm. It's commonly known that this is an issue. And look, Ethereum is a hundreds of billions of dollar market cap asset. It, I guess, can compete on the stablecoin narrative, and I think you kind of saw that this play out, where it was all priced in. You needed Tom Lee to start shilling for ETH on television. I think some of his arguments were just wrong, which is a little bit frustrating, where he kind of said, Robinhood launched on Ethereum, where it didn't launch on Ethereum. It launched on Arbitrum, and that's a very notable distinction. But to the Wall Street, less in the weeds of crypto Twitter person, it looks like a pretty convincing argument, and maybe that Ethereum was underpriced relative to Solana. So you can definitely paint a clear picture for why this is happening. It'll be interesting to see, what Solana's next pitch is. I don't know exactly how well Solana competes in this like treasury company world. Mm-hmm. It seems like maybe some of the leaders in the Solana world are less gung-ho to get involved in treasury companies. You haven't seen like a Solana Foundation treasury company yet. Maybe we will. but a lot of the focus is on internet capital markets and tech upgrades and BAM and these more technical things that don't work in the kind of meme stock world we're living in this summer. But maybe if you're a Solana fan, you'd say that a few years down the line, many assets come onto Solana, and you win long term for that reason.
Yeah, I guess like I would say there's some sort of truth to the ETH narrative in the sense that despite Solana's improvement in the past like 5 years or so, like it is still been very hard to attract like stablecoin liquidity on chain. And like despite some Solana DeFi apps like being incredibly good in terms of like security, UX, they still like are a fraction of what Ethereum based applications like on the DeFi side like generate in terms of revenue and in terms of like TVL and borrow activity and so on. So I do think there's some stickiness to ETH that is worth like that. I don't think like we can just like shrug off. Like I think there's some truth to that. Like for instance, Aave has like more than $50 billion in deposits. I was seeing some statistic the other day, like it places it like in top 20 banks or something in the US if you were to like just like rank it by deposits. Whereas on Solana, you have like Camino as the largest one with like 4 billion or something. So it's like still like 1/10, like even less than what the largest money market on Ethereum is. So I do think like from a DeFi perspective, especially like Solana is still like lagging in terms of like maturity, and that kind of doesn't resonate like with TradFi. Like TradFi sees, okay, where are stable coins like launching, and they see Ethereum with 80+% of the market share. Where like money market activity taking place, they see Ethereum like with the market share. So I think that's kind of like what we've been seeing in the past few weeks or months. Yeah.
But does stablecoin liquidity really matter? Because like you bring up Aave, and yes, Aave is an incredibly impressive protocol. I think there's a lot of effort being put in behind the scenes to create something like it on Solana. I mean, Jupiter launched its lending app, I believe, in May. I actually haven't really seen what the uptake has looked like there, but it's something that people want to do. But all that to say, it's not like people are financing mortgages on Aave or whatever. Like there's not productive real world activity happening in either place. So is there any reason other than just the kind of convince a dumb banker to buy Ethereum reason that stablecoin liquidity really matters?
Yeah, I guess that's a good question, but it like I think that's a good point. Yeah, you kind of like left me with no argument there. Like but I don't think it's like pure, like I wouldn't say it's not productive, right? Like why would you say like it's not productive, like Aave or Camino today?
Well, I'm not saying that. First of all, I'm honored that I left you speechless, Carlos. It's first time in these episodes I've done so. But I'm saying stable coins maybe are pitched as this serious real world. Some people call stable coins real world assets, right? It's not like a meme coin, which is what a lot of Solana DeFi activity is centered around. But people on Aave are not necessarily using finance to accomplish things in the real world, which I think is what you would think of RWAs as, right? Like, can we democratize access to some asset class? So like, I think of there's that one on Solana that lets you buy like mineral rights, right? That's like a difficult to invest in asset class that DeFi makes it easier for you to participate in this thing in the real world.
I mean, maybe it's not what you see. Like, yeah, obviously, like the most popular use case in money markets today is probably like just looping like the native assets. So you just loop like a liquid stake against the stake, but you also, that's just like what most people do, but it doesn't mean you can't do the other things, right? So you can like deposit ETH, take a stable coin denominated loan, and then just deploy that in the real world. Like there's nothing preventing you from doing that. It's just like not a lot of people do it, right? But like you fundamentally can can do it if you want to. Like Camino, for instance, recently onboarded X stocks, which are like tokenized equities, like US based equities, and then there's more than $1 million of X stocks like in that market. So like, yeah, it's not the most popular use case today, but I think like we're seeing that kind of like shift toward most productive use cases, if you want to call it that way. And then you always have like the option of doing so. Like even if most people are not doing it, like if you could today, you could do it. Like you could deposit your soul, take down a stablecoin denominated loan, and like spend that in the real world. Like there's nothing preventing you from doing that, I think.
Yeah, point taken. I'm not saying that these can't be used for productive reasons, but I think when you talk about things like the stablecoin market cap on a network, it's like great, but why? What are those stablecoins being used for?
Yeah,
and
I agree with that. And I think a lot of the ETH based stablecoins are just sitting, like I don't have the data, so I cannot like speak to the actual numbers, but a huge percentage of that is just sitting on centralized exchanges probably. So that's one point like in your favor. Yeah.
I mean, and I just pulled up the Ethereum chart here. The market cap of stables on Ethereum passed 100 million in 2022, and it's currently at 130 or 100 billion. I should have said it's currently at 130 billion. So a large amount of that growth happened, years ago, and a lot of those stable coins just never left, even through the bear market. But that doesn't necessarily mean. And listen, this argument goes both ways, right? Solana saw tremendous growth in its USDC supply suddenly in June, which is not because it suddenly became so much more useful for real world activities. It's because the Trump meme coin was paired with USDC. And so a bunch of people, bridged USDC onto the chain. So I just think that it's kind of an annoying, it's a bugaboo for me that Ethereum is seen as the major winner of the stablecoin meta, whatever you want to call it, which maybe speaks to just the fact that this is a very clearly lucrative trend. And outside of the Circle IPO, there's just very few good ways to get exposure to it. And so any whiff of it's kind of like AI, in venture capital a couple of years ago, where it's like, if you can somehow attach this moniker to your asset, you'll draw a bunch more investment. That's sort of how stablecoins and Ethereum feel to me. Solana is just as good for stablecoins as Ethereum and its layer twos, I would argue.
Oh, no, I totally agree with that. Like two thoughts from this. Like the first one is I'm interested to see like once Plasma launches, which is kind of like framed as this like tether backed chain, like will stablecoin activity like move significantly to there? And then the other thing is like on the Ethereum point, like one last point is like if you look at yield bearing stablecoins, which is kind of like very interesting, like not just like stablecoins that don't do anything, like yield bearing stables, most of them are issued on Ethereum, and I do think like that's an interesting like trend to look out for. Like Athena, for instance, like USD is launching Ethereum, like Makers USD is obviously, or Skies is launching Ethereum, like most of Maple's like syrup USDC supplies on Ethereum as well. So like, yeah, like sure, like USDC, USDT, most of that is like from years ago, but like you also see that new yield bearing stables are also like mostly issued on Ethereum. And like when Athena tried to launch on Solana or expanded to Solana, he saw basically no traction.
Okay, Carlos, I want to talk REV as well. This is a metric that maybe gets posted about a lot in the Solana world when things are good, and doesn't get posted quite so much when activity on the network is a little lower. So Solana finished the month of June at 62 million in REV, which, for those who are unfamiliar, Blockworks Research pioneered this metric, and it measures tips and fees paid to transact on the blockchain. So you can think of it as a proxy for demand to access Solana or Ethereum or Tron or whatever.
Yeah.
62 million in June. Since February of 2024, there has only been 1 month lower than that number, which was September of 2024. which obviously came right before activity picked right back up because of Trump's election. It looks like July is going to top that. It'll be closer to $70 or $80 million. But nonetheless, the point stands. REV on Solana is unmistakably like lower than it has been in some time, and in June was lower even than it had been in mid 2024. So is that a reason for concern if you're a Solana investor, or do you see this as kind of a short-term blip and things are going to turn around?
I would say like a mixture of both. Like, it's concerning in the sense that you kind of like had this narrative that Sol price was driven by REV, and then now REV is down. So how can you justify like the price going up? Like if you were solely valuing based on that. And I think there's some portion of it that is just like meme coin activity, like not being as prominent as it was in like the past few months. Like if you look at REV, it mostly comes from trading activity, and especially like highly contentious transactions where you have like this urgency to get like fast transaction inclusion on the chain. So most REV comes from just like pump fund, let's bong.fund, like Axiom, Phantom, this kind of trading focused applications. And if you have a decrease in that sort of activity on chain, then you also have like a decrease in REV. Like looking forward, like what I'm most interested in is just like Jito's BAM, because that like new upgrade is going to internalize some portion of the MEV that previously used to go to like Jito tips and the Jito block engine. So I'm just curious to see, like, what I think will happen is that we'll see applications earning multiples more than validators and stakers. And this is kind of like a trend you've already seen on chain, where if you look at the ratio between application revenue and REV, it has been up only in terms of like applications will continually earn more and more as a percentage of just like what you see validators and soul stakers make.
Interesting. Yeah. Maybe that's a good segue just into, Jito unveiled BAM, which is, I don't think it's hyperbolic to say probably one of the most consequential upgrades to Solana's transaction architecture ever. You took a deep dive into this. You did a research note on it, and it ties into kind of, Solana's value accrual and a lot of those conversations. So we're actually, I think, going to have Lucas on the show soon, so I don't want to go too deeply into it. But Lucas, the CEO of Jito Labs. But to your understanding, just give us a quick, couple sentence overview of what BAM is and why people should care about it.
Yeah, I mean, Lucas is probably going to do a much better job than me on explaining this, but like in basic terms, like from my understanding, is just a new transaction processing engine. Like it uses an encrypted mempool inside of a TEE. And so what it offers is block building for Solana that is private and verifiable. So like applications that weren't previously possible on Solana are now possible by improving like the microstructure and the design space via plugins, which are kind of like these, like, if you look at Uniswap before, they kind of had like this hooks architecture. It's kind of like that, but for block building, where you can have like kind of like custom sequencing of transaction on your applications via plugins. So imagine Drift kind of implements a plugin for like prioritizing cancels for market makers, right? So you kind of like remove this huge barrier that you previously had, and now perps are now possible on Solana, or like order books are possible on chain. Also, applications that require privacy, such as dark pools, are potentially now possible on the L1. So I think like it's a really cool upgrade, a really interesting like development. And I'm curious to see like these launch partners like Drift, for instance, how they leverage plugins, and if they can actually deepen the liquidity on chain, have more trading volume, and like compete with other like centralized exchanges or like other perps exchanges like Hyperliquid that have gotten the most volume so far.
totally. Well put. I think it's an interesting upgrade for a few reasons. I think maybe a good headline one is if you're Solana, Hyperliquid is a pretty scary competitor if you're going for sort of just the retail trading segment of the market. There are on-chain perps exchanges on Solana. You have Jupiter, Bullet is coming out. Obviously, Drift has been around for a while. None of these do anything close to the amount of volume that Hyperliquid does. So if I'm Solana, I'm pretty concerned about that if I want to be competitive as a blockchain, and especially a blockchain for traders. And I think that BAM, by allowing for apps to do things like prioritizing cancels and sort of helping market makers not get picked off quite so often, you allow for that to happen.
Yeah, 100%. I think, like, I don't know if my explanation was very clear. I think Lucas will probably do just a much better job at this, but like, yeah, it's like the design space, it's like it's open to experimentation, which is the cool thing, right? Like, it's not just like prioritizing cancels. Like with plugins, you can do like basically anything like you can like want to do with your sequencing of transactions, or any cool experiments you want to run, like you can do it now, which is kind of cool because it's like opening up a competitive landscape for like applications to come in and just like experiment with plugins to see which one delivers the best results. And I think like that kind of like flexibility, like just for developers, is really cool for like improving like or unlocking that new use cases on the L1. And 100%, like one of the things that I was thinking about when I was reading about BAM is just like over the past few months, you've seen a lot of Solana native teams like get frustrated and like kind of launch their SBM chains. Like I'm thinking about, for instance, the Ellipsis Labs team is launching Atlas as an L2. The Zeta team launched Bullet, which is kind of like this network extension. And then you also have like Fogo, which is another like SBM chain. So I'm just like, I'm really curious like how this changes the outlook for these type of SBM chains, because it seems to me that if now it is possible to actually do this on the L1, then these kind of SBM chains lose their edge, you know, like their distribution and their differentiating factor, which was kind of like we're able to do this, which you can't on the L1.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. That's fascinating. Yeah. Fogo went live on testnet recently too, right?
Yeah.
Okay. Yeah, that's an interesting implication as well. I hadn't thought quite as much about, because there's quite a few SVM chains at this point, which it's a narrative that doesn't get looked at a whole lot, but there's a number of these things. I thought the other interesting point here involves sandwich attacks, which are this somewhat hard to measure, very much still present problem that Solana has been dealing with for, like in an official capacity, at least since early 2024, right? That's, I think, when Jito got rid of its mempool because too much sandwiching was happening. If you remember, longtime listeners of the show, mid 2024, the Solana Foundation and Jito take some steps to, identify people who are sandwich attacking users, which basically just refers to front running and back running a trade at the expense of unsophisticated users to profit based off of how much you can move the price while they're trading. they identified people who were doing this, which is extractive to users in the Solana world, and just tried to blacklist them, wouldn't allow them into the stake pool, wouldn't give them a delegation of the Solana Foundation's stake. But obviously, in crypto, you can always spin up a new validator node under a different identity and just get right back to sandwiching. So it was always kind of a whack-a-mole game and a difficult problem. I think BAM takes a more interesting approach. And Lucas will probably explain this much better if and when he comes on the show, or whoever from Jito may come on the show. But my understanding is you have these TEEs, which is sort of an off-chain secure computing environment that allows the BAM nodes to not leak transactions. And so you don't see what's going to be in the Jito bundle or however these things are submitted until they've already made it to the blockchain. And so this just allows less time for sandwiching validators to like see transactions, which is kind of the whole ball game. Interestingly, I've been learning recently, we had Max Resnick from Anza on the show, and he was mentioning, and the stats I think bear this out, that Solana sandwich attacking revenue is actually decreased over time because as the Solana network gets more efficient, there's less need to spray a transaction super wildly. And so fewer validators are seeing each transaction on average, and there's less opportunities to basically see a lot of order flow and try to find orders that you can sandwich attack. So it's also an interesting continuation in that direction.
Yeah, it's like a very interesting architecture because it's private in the sense that you cannot see what's going on inside the mempool. But at the same time, like these things called BAM nodes, they sign an attestation. Like when they schedule like a transaction, like and send it to the validator, they also sign an attestation. And that attestation goes to the entire Solana network for everyone to see with the ordering of transactions. So if the validator that includes that block did not follow that ordering of transactions, then everyone is going to know that they committed potentially a sandwiching attack. And you kind of have like this social pressure where if you behave badly as a validator, then everyone's going to know about it basically. So it's kind of like this social pressure for validators to actually sequence transactions in the way that BAM nodes like transmit those like messages or bundles or whatever you want to call it.
Okay, I think that's a good overview on BAM. The other piece that you mentioned at the top of the episode, Carlos, that I want to ask you about is the block limit. So within every Solana block, there's a certain amount of compute that can be held within each block. I think it began the year at 48 million. We're now going to push it to 70. And Anza has promised to double block space, so to up near 100 million by the end of the year. But as you've looked at this most recent proposal and maybe the impacts that the block increases we've seen this year have had, what are your thoughts?
I think it's great. I'm looking forward. Like just for context, like we started the year at 48 million like compute units. They did a small 4% increase to 50 million, like in April or something, like just to test things out, like just to see if everything was all right, like with the parameters in the chain. They then did a 20% increase to 60 million CUs, and now they're proposing another increase to 100 million CUs, which speaks to like Anza's goal that you mentioned of doubling block size this year. I think like it's great because it's just like this IVRL thing, like it's just like increasing bandwidth for the network and allowing like more transactions to be included on chain. I think it's going to lead to an increase in TPS. If you see like our chart on successful transactions, like on the Blockworks analytics page, you see that this week was an all-time high in successful transactions for the network. And I think that speaks to like the increase in block size limit and more people being able to like put that on chain. It also enables the chain to be more resilient in periods where transaction activity is really high or you have these huge spikes in demand. Like for instance, think about the Trump meme coin launch or think about the Pump ICO. if you have higher block limits, then you're better able like to handle such demand in the network. And yeah, like looking forward, I'm really excited. Like people talk about doubling block space, but I'm more excited actually about reducing latency and like eventually decreasing block times below 400 milliseconds. And with Alpenglow, I think that's something like you can realistically target in the next months after Alpenglow goes live.
And block times, I believe on average already are below 400 milliseconds, because
Yeah.
I did some, I did a piece on, there's this kind of interesting slow validator problem on Solana where sort of through a meta that FireDancer maybe popularized or brought to light, it can be profitable to wait as long as possible to pack your Solana blocks, because then you get access to more order flow. And so this was slowing down the network, and it seems like some of the worst offenders of this have been shamed back into, quickly processing blocks, but it already is below 400 milliseconds. Alpenglow reduces the time to finality a lot. So the time, because you have the optimistic confirmations basically on Solana currently, but with Alpenglow, stuff is actually, finally confirmed on the network. I think 100x quicker is the number that gets thrown around.
Yeah, the time to finality is 100 times quicker. I think Alpenglow will get rid of voting costs, which is kind of like the biggest barrier to decreasing block times, like officially today. And the reason for that is that imagine if you reduce block times, like if you halve them from where they are today, you're effectively doubling voting costs. And so it's a huge strain for smaller validators if you just double their voting costs. And so if you kind of like reduce that barrier, you open up like the floodgates, let's just say, to reducing like block times in the future.
I think one question that may arise from raising, like doubling block times, and it was actually interesting, we did a FireDancer episode recently that I thought was quite good, and Michael from FireDancer basically said get rid of block limits entirely. Just let the market decide what, basically, like how full blocks can be to still succeed on the network.
Mm-hmm.
Because that'll like make Solana as performant as possible. But to my understanding, the downside of that is it becomes quite expensive to run the hardware necessary to participate in validating Solana transactions, right? So is there a centralization, or only corporations basically are able to have the capital to be Solana validators in that world?
Yeah, I think you have to ask yourself, is that really a bad thing? Where you have like, is it really bad? Like if you increase like the barrier of entry to validators, I think like when it comes to centralization, you also have to think about like, what does decentralization mean? And maybe it just means like being geographically distributed. And if you still are able to have like this geographic like distribution of validators, like even if like the requirements are really high, maybe that's kind of like good enough from a decentralization standpoint, and kind of like the trade-off you get in terms of like an increase in performance is worth it in that regard. That being said, I'm just like not technical enough to understand what are the risks, if there are any, to like just saying there are no limit to block size. Maybe it does bring on some challenges that we are not aware of, like that are potentially harmful for the network.
I think you could put it slightly differently too, as not letting the perfect be the enemy of the good.
Yeah.
Where if the point of Solana is to create these internet capital markets, as everyone loves to say these days, where anyone can kind of get access to and verify financial services that are happening on blockchain rails instead of traditional financial rails, and this again gives more people access to US equities and maybe hard to access financial services, but that's only unlocked through a world where there's a couple hundred Solana validators and they're all run by the Coinbases and the Galaxies and the Temporals of the world. I don't know why I said temporal, but some of the just the popular validators, RPC nodes on Solana continue to run validators, but you're kind of at home, just some guy who got some server access in a data center somewhere can no longer participate in validating Solana. Maybe that trade-off is worth it to you if that's what it's going to take.
Yeah, I would say, like, for me, it is worth it. Yeah, I don't think like Solana is going to be any less censorship resistant because some guy in his basement cannot run like the validator. Yeah,
and I think so. A lot of this is like the same kinds of arguments that were being had with the Bitcoin block size wars back in the day. And when you think about stuff like that, initially, like in the very beginning, people could mine Bitcoin on like a laptop, right? And no one is validating Solana on a laptop. Like it's not that decentralized to the point where like truly anybody can participate in being a Solana validator. There's still a significant amount of overhead. If me as Jack wanted to create the Jack node, I would probably have to go through some third party who's going to handle the whole technical side and, find me some server racks in a data warehouse and do all of the necessary overhead, and would probably take a fee. So
yeah,
I don't know. It's not like things are so decentralized that truly anybody can be a validator today. Like I guess technically anybody could be a validator, but it would not be profitable or worthwhile for just anybody to run a validator today. And so maybe that trade-off of higher hardware costs, less participation is worth it for what it unlocks in terms of, actually bringing a much larger amount of the financial world on chain.
Yeah, exactly. And I think like you also had like previously, like the Solana Foundation delegation program was kind of subsidizing a lot of these smaller validators that would not be profitable if they did not have this like delegation, like, and so I think it's a trade-off that it's worth, like if you tell me like Solana is going to be 100 times more performant today, but we have to like cut 20% of the validators, like, yeah, let's do it. Why not?
Mm-hmm. Okay. Last question I have for you today, Carlos, before we get out of here. But if you talk to liquid funds or more Wall Street types and you say, hey, what are you interested in Solana or in crypto these days? Odds are they're going to say treasury companies. I've seen this many times in recent weeks. I find treasury companies incredibly boring. It's a NAV play where for some reason the market values 100 million of Solana being issued by a public company at more than $100 million, and they'll pay for that premium. Investors will. And we've kind of seen this, especially during this summer, become like the meta, the thing that you have to compete on in the crypto world. Assets will randomly pump, and then a few days later, it will be revealed that somebody has, done a large pipe offering or some kind of SPAC or something to go public with a crypto treasury strategy. So, seeing that this is the world we live in, how do you think Solana stacks up as like a material for treasury companies? Is it at a disadvantage in that world or at an advantage relative to other crypto assets?
First of all, I kind of agree with you. I find it incredibly boring and like just this meta of like just buying like a bankrupt company and just turning that into a treasury vehicle for holding Sol or ETH or whatever asset. Like, pick your favorite crypto asset. I don't think Sol treasury companies are going to be as successful as Bitcoin or Ethereum treasury companies just based on market cap. I remain more excited, to be honest, about the ETFs, especially like the staking ETFs. And if they go live later this year, I think that has a lot more potential to attract institutional flows and actually create meaningful buying pressure for Sol, the asset. And it is just a much more attractive vehicle. Like like maybe I'm mid curving this, but I really don't understand why you would buy like a vehicle instead of just holding like the underlying asset, or like leveraging like the underlying asset itself. Like it just doesn't make sense to me. Like it never clicked. But I don't know. Maybe I'm just like, I just missed this meta. Maybe I'm mid curving it. I don't know. But it just seems like incredibly stupid to me. Hopefully we see staking ETFs go live later this year, and it takes like a larger portion of the flows.
Yeah, I mean, we could bring people on this show, and we have, that would full-heartedly defend this trend and say that it's a better way to, buy and get exposure to crypto. I'm not necessarily a big believer in these things. And I do think that you need to operate under the assumption that at least one, if not multiple, of these treasury companies are going to go to zero, and shareholders are going to be harmed in the downfall of these things. And so I think that it's encouraging to see that the official Solana world, at least, has not gone so much into Solana treasury company land. That remains to be seen. Who knows? Maybe Toli and Raj are cooking up a treasury company. I have not heard of such a thing, but you talk to people behind closed doors, and I think it's kind of the thing where it's like, this trade doesn't logically make a ton of sense, but it is profitable, and a trade can be wrong but still profitable over some time horizon. And if you look at a lot of these things, the amount that you can profit just from this really stupid pitch of a company that is probably going to get delisted from the NASDAQ soon, buying and holding a bunch of, some random token, is profitable right now. And so people are going to make that trade as long as it is. But when that trade becomes unprofitable, I would think it will become very unprofitable quickly. And you'll see some of these things blow up, basically. And you need to operate under that assumption of how are people going to think of me when this all blows up? And so it's maybe encouraging to see that Solana is not quite so worried about competing in the treasury company meta.
Yeah, I totally agree. I mean, there are some rumors like in recent weeks of like new treasury companies like spinning up. But let's see, like, hopefully it doesn't take like the front page in terms of narrative. I think that would be incredibly bearish if like the bull case for your asset is just treasury companies buying the underlying asset. That just seems incredibly bearish to me. I would agree with you.
Exactly. Well put.
Yeah.
Well, Carlos, that is all the time we have for today, but thank you so much for coming on the show. It's been fun getting to talk shop with you, my friend.
Yeah, absolutely. Likewise. It's always fun being on Lightspeed.
And thank you all, listeners, if you made it this far. If you enjoyed the episode, we'd love if you'd give it a like, a 5-star rating, a retweet, wherever you get your podcasts. Follow us, subscribe on Spotify, do all that good stuff. If you enjoyed this episode, we'd love if you shared it with a friend. And we'll see you again very soon.